Thank you so much, John. And thank you, Kim, for doing this today. Obviously, AI is front and center in everybody's mind, and you're really at the center of this ecosystem from a venture and IPO standpoint, from an M&A standpoint, from a debt financing standpoint. Based on that 360 view, do you get the sense that AI is in a bubble right now?
So great to see you, Leslie. Thanks for having me. So the AI bubble question, that's the multi-trillion-dollar question. I think that AI will be absolutely transformative and value-creating across industries over time. AI is already doing things that were previously unimaginable, and there's so many parallels to the internet sector and how that fundamentally changed our lives. And AI, I think, has similar transformative potential, but it's much greater scale, it's much faster, and there's much broader applicability across consumer and enterprise. So, having said that, there's a report that our equity research team just did where they looked at periods of major tech innovation over a 175-year period. So they looked at 1825 to 2000. And they found that there were 51 periods of major tech innovation over that 175-year period. They found that 75% of the time, that led to equity price bubbles. They also looked at the current environment, and despite many similarities, they found that we weren't in an AI bubble yet. Now, I think it's still too early to tell. And so what does that all mean? AI will be absolutely transformative and value-creating over time. I do think that the path will be up and to the right over time. I just don't think it'll be a straight line. It'll be ups, it'll be downs, you'll have winners, you'll have losers. When you're allocating this amount of capital this quickly, you're bound to have winners and losers, and we don't yet know who's going to allocate capital well, who's going to allocate it poorly, and time will tell. We also don't yet know how value will accrue across the ecosystem. So time will tell, and it'll be really interesting to see. Speaking
of that allocation of capital, some eye-popping figures just in the last few months in terms of the amount of debt issuance that some of the hyperscalers are, embarking on in order to fund this long-term trend. As you talk to participants in the market, whether it be clients, whether it be investors, is there a sense that maybe things are getting a little over their skis in terms of just the amount of debt we're seeing right now?
Yeah, so the majority of the capital raising that you're referring to is being driven by the hyperscalers. And debt investors have been very excited about the opportunity to get more exposure to those hyperscalers. You have to remember, the hyperscalers are huge, diversified businesses with enormous amounts of EBITDA and cash flow and balance sheet capacity. They're at the very high-quality end of the investment-grade market. So even pro forma for these large capital raises, they still have very healthy credit metrics, and they still have more debt capacity. And so, having said that, I do think that the heavy supply is impacting credit spreads. So credit spreads have widened slightly. But I think that's just debt investors recalibrating to a larger aggregate debt quantum across the hyperscalers. And I go back to what I said earlier. These are just enormous businesses with healthy cash flow and very healthy credit metrics.
Yeah, no, they've widened, but not necessarily screaming an alarm at this point in time. Do you think the circularity of some of these deals merits caution? Model companies, infrastructure providers, hyperscalers signing deals with each other. I know you're in the boardrooms for some of these. Yeah. Does it kind of ring any 1999, 2000 bells to you?
Yeah, I think that some would argue that these are very strategic partnerships and strategic investments in an AI ecosystem that is merited because of the size of the opportunity. Others would argue that the interconnectedness creates elevated risk, especially in the event of a correction. And I think probably both are true. Now, as you were saying, you're talking about the boardroom. I do think that it's been a very interesting and dynamic environment for our clients, including in the boardroom. You've got this evolving macro backdrop. You've got accelerating conversation around AI and digital transformation related to investment and M&A, but also operationalizing AI. And in the back half of the year, you've seen this improving macro backdrop. So you've got a pro-growth U.S. administration. You've got a constructive regulatory environment. You've got a continuing Fed easing cycle. We'll see what December brings as it relates to rate cuts. You've got equity markets near all-time highs. You've got robust public market valuations. And you've got AI as a growth catalyst across all these sectors. So all of that combined is driving CEO confidence, and that's what's leading to this uptick in M&A and IPO activity.